out.
All right, so let's get to sector spotlight because I want to know kind of from your point of view what sectors are the best to trade in right now and which ones you just have to totally avoid. I want to start with retail, and yes, there are certain retail stocks that I do like, but on the whole, this is going to be very levered to the consumer, which I feel like is just going to get really hurt, especially with the unemployment data we're going to come Friday and the slow growth.
Well, right now, let's take a look at the RTHs, which is the gauge of retail. So far, it's acting better than the S&Ps. The S&Ps came all the way down to the 200-day. The retail, or this sector, just started to break this pivot area. So as of right now, retail is acting better than the market. So right now, retail isn't pricing in slower times. Maybe
it is pricing in slower times.
It isn't
it's
yet,
not, okay.
Because it would be under the 200-day. It would be underperforming. Right now, it's still not there yet, just like let's look at the Qs in tech. Okay, this sector has been acting phenomenal. Even on Friday in the down day, you saw some of the key stocks try and go positive, giving you some clues that something would get done. If you look here on the Qs, you will see that look how much higher we're holding. Qs were just at new highs, and we didn't even get to the lower pivot that broke in the retail group, and look how far we are from the 200-day. So right now, the Qs in tech is still the place to be. Anytime this market bounces, this is where some of the health is. So
in tech, not in retail. What about banks? And I say that because a lot of analysts are saying that if a deal does get done in Washington, the banks will rally, but flip it. If we get a downgrade, the banks will get hurt as well.
We've been talking about the banks trying to hold that lower level. Goldman Sachs, JP Morgan, Bank of America. I see some strength. There was some divergences last week that I haven't seen. So before I get into the XLF, I want to show you Goldman real quick. Look at GS. Look right now how you had a small break above this key area, right? And now it's been holding. It's been holding higher. I think you could be in some Goldman, and I think if it could start getting through this flag here around 137, 138, you might see some follow through to the banks, and that's going to be something to watch to see if this market can continue higher because the banks have acted poorly. So as far as Goldman, JP Morgan, Wells Fargo, they're trying to stay in the game.
But not the XLF. The XLF is saying something different?
Well, if we take a quick look at the XLF, just because it doesn't move, it held the lower end of the range. It didn't break this area. This overall is not showing health at all, considering it's below a lot of the key moving averages. You look right here, it's below the 200. It's below the curling down moving averages. So now this is your last line of defense to watch. This is around 1460. If this were to break, I guess those lower levels in the banks will break. So you could watch the XLFs. But I think that you watch Goldman, JP, and Wells Fargo. All
right, I want to go to oil also, so let's go to the OIHs here. Energy getting a nice pop today on sort of higher demand. Things are going to be clear up in Washington, but again, I hate to be, the doom and gloom over here, but if we do see slowing growth, oil will get hit.
Well, there's always that sweet spot for the oil companies on what price oil actually has to be for their profits. But as far as the chart, the OAHs are also holding up better.
And obviously over 85, it's still high. It's not like we're down at $30 a barrel, right?
Exactly. Look at this last descending channel that broke to the upside. All we're doing is coming back and retesting this. The OAHs, to me, look healthy. It's above the 50, the 200. It's actually holding between the 10 and the 20. So for those looking to buy the dip, this was an area on Friday if you could take some risk. You still have a high, a lower high. So, we could get a bounce, but we'll see. This group is in the game. It's holding better than retail, and it's holding better than the banks. And, tech is just still acting a little better than that.
And then real quick, let's go to the IYT because, as the transport goes, so goes the Dow. What's the chart telling you for the IYT?
This was like a fake out earlier in the year, if you remember. Look how this made new highs here, broke above the resistance, and then came in really hard. This just held the 200-day light in the indices that held this lower pivot. To me, this is showing weakness, and if the Dow theory is intact, this is showing you a lower market, but I'm not going to go in that camp. I just think that this group is just out of play for now.
All right, so what we learned, tech. Tech is the place to be, and we will be right back with your high beta tech plays right after this.